Hey guys, welcome back. In today's video, we are talking about AMC bankrupting shorts, how shorts are going back on their words, how we've been given a fair value of $120 by shorts, and many more in this video. Firstly, we're taking a look at this. Good to see the SPY recovering, IMAX green, Cinemark green, AMC still red. Guess IMAX and Cinemark is distributing Taylor Swift instead of AMC. So when we take a look at AMC today, we're actually down 0.33%. Now, when you take a look at everything else that's going on, you'll see with the market, it's obviously going up, but AMC, who recently talked about the good news, is actually down. And so we've talked about this. Whilst the whole 6% for AMC didn't contribute to entirely because of Taylor Swift, it still is something that is very good for AMC because this particular film, not only is it good for the box office, but it's also beneficial for AMC distribution. Yet we're seeing AMC being pushed down. Now, when you take a look at the dark pool, you'll see that the reason for this is very obvious. 62% dark pool, where we've took over 8.5 million of volume away. Now, we talked about this. This is during the time where AMC has just released good news about its company, not only for the box office, therefore increasing their revenue, but also about the other revenue structure, which is the film distribution. And we've said how this is already attracting multiple investors. We've seen how institutions are increasing their accumulation. And so because the institutions in terms of short sellers know this as well, that's why we're seeing them hiding the volume away. Bear in mind, we've talked about this in the past before. When you take a look in the off exchange in the dark pool, you'll tend to see that the majority of these trades are actually buy orders. But more importantly, not only are these buy orders, but there are also large blocks of buy orders. So what we are seeing is that, of course, the orders that should be positively impacting the price, pushing the price of AMC up, is actually being hidden away in the dark pool. And so this is what we've said in terms of how valuable AMC is, but these short sellers want to obviously keep AMC down. You can see AMC is about to make a ton of dollar thanks to Taylor Swift news, and stock goes down 3% the following Monday. However, no panic here. Fourth quarter about to be amazing, and AMC isn't going bankrupt. But of course, if you take a look at the hedge funds, they are telling a different story. Now, we've just said how well AMC is fundamentally doing. Like we've said, we're seeing not just the Taylor Swift film, but multiple films contributing to the box office. And that box office is obviously very good for AMC as well, as we're getting a share of the profit. But not only that, it's talking about the film distribution, which we've already talked about multiple times. And so you can see how overall AMC is doing very, very well fundamentally. Now, on the other hand, when you take a look at the positions of the short sellers, you actually see that they are not in the best of positions. Firstly, we talked about how margin debt is going up and what that means. Like you said, we talked about this already, so I don't want to bore you guys with the same information. But then it's talking about how not only are their loans going up, meaning that they're trying to borrow them more money, but also they're seeing their liquidity going down. What I mean by that is their collaterals going down, the reverse repos going down, and what we've seen recently is how they are getting tied up in other positions, which once again is running into their liquidity. And so when you compare AMC and these short sellers, you're seeing two different companies. You're seeing two different institutions operating. One is doing very well, is showing very good potential, and is trying its best to obviously grow. The others are still trying to continuously suppress these other stocks, are trying to fabricate that they are in a good position, despite everything they've shown with the financials, despite everything that the market is showing to us in terms of how much money they are losing. And then you can see here as well, and there's another reason for why we've said that AMC has proven itself to be a very good investment, why institutions want to buy this. Firstly, like we've said, this is something we've mentioned in the past as well. You can see movie going is recession resistant, right? This is something that was released back in April of 2025. And the reason why I'm putting this up is because last video we talked about this, about why institutions want to buy into AMC, why they feel that AMC is extremely good stock, and not just that, but of course why the industry is very good, because firstly, we are recession resistant. And at a time where we've talked about this, where a lot of the stocks right now are extremely overvalued, we've talked about how they're easily due a 60% decline. we've seen the overall economy, and bear in mind this is the economy, not just the stock market, are not in a good position right now. This could easily lead to a recession, easily lead to a market crash. And so at times like this, when we're seeing all these warnings of a market crash, of a recession, and people who want to go to a safe haven with their money, they're eyeing up movie stocks, the theater stocks. And in this case, we obviously have a few to select, whether it's IMAX, Cinemark, AMC. And this is why we've said that they are trying to, and we've seen how institutions have been trying to accumulate as much AMC as possible. Now, of course, the decision for them to make is between of which stocks in this industry is obviously the best. And we've talked about this, we don't want to be biased, but when you look at everything that's going on and going off of what we've said yesterday, AMC has positioned themselves very, very well. Yes, we're still seeing institutions buying IMAX and Cinemark, but at this point, it feels like to us that they are only buying into them because they've already bought over the flow and they're trying to keep it, at its current price. And these institutions want to make it look like an incentive to buy IMAX, to buy Cinemark as opposed to AMC, despite what we've said, how well AMC is doing. And so there are multiple things to take away from here. Firstly, it's about understanding why people have been trying to increase their holdership of AMC, why we're seeing these institutions, just putting in a large amount of capital into AMC now, but also how AMC is proving themselves to be the number one stock within this industry with the multiple revenue structures that they have created, operating, and improving. And so this is why it's obviously very important to understand. And now we talk about the mistakes that these short sellers have made, and it looks like it's about to happen very, very soon where we're going to be seeing these short sellers pay. First, you can see shorts did a huge mistake with GameStop. Asset increase and liabilities decrease is literally their worst nightmare playing out in plain sight. Now, this is obviously for GME, but we have to realize that the same can be applied for AMC as well. We've always said this is not a competition between AMC and GME. It's always been a joint thing together. We're battling against these shorts. And so whilst the same thing applies for GME, it also applies for AMC, where we're seeing assets increase, where we're seeing our financials improve, and we're seeing the liabilities decrease. And that's exactly what's happening for AMC as well. We're seeing the revenue increase. We're seeing these operational costs decrease. We're seeing the debts decrease. So you can see how these two are obviously working side by side, and why we've said that these short sellers are, of course, being pushed to a corner by us. But not only that, it's about looking at this. So popular broker Webull puts a GameStop fair value of $120 articles in its newsfeed. So where we're seeing this particular article, you can look at it for, this is for GME, is obviously talking about its recent earnings and the special dividend announcement, which is the GME warrant. For those of you who don't know, you can see how they gave a valuation of GME at $120. Now, this is because of everything that GME has done. We've seen about what they've done in the past. We've seen what they're doing right now. Once again, Bitcoin investments is turning out very, very well. You can see with the warrants as well. And we're going to get more into that warrant later on. But this is what we're looking at, $120 fair value, and it's talking about how undervalued GME is. And so this is obviously very, very big, and it could possibly be why we've talked about how these warrants have caused so many problems already, not for the retail, but for the short sellers. And so you can understand when we talk about how AMC and GME is undervalued and why we say there's so much potential in this. But if we talk about why these warrants are causing problems, firstly, you can see we talked about this. Firstly, is about the South Korea broker, which has said that they are forced liquidating the GME shares, and this is something that will be happening very, very soon. And these are the first problems, because we talked about South Korea is very strong on battling against the negative short. And the moment GME, a stock that suffers so much negative shorting, is issuing out warrants that could cause extreme volatility, you're seeing how brokers are forcing GME positions to be closed. So that's the first thing. The second thing is how the GameStop stock warrant will not be tradable on IBKR. But not only that, what I'm hearing as well, and once again, this is something that I've searched. Now, I personally do not use Robinhood, but for the ones who do, if you can check, is that it said the Robinhood doesn't support the GME warrants as well. Now, when I Googled it, it said that, and you guys can feel free to Google it, but it may be a different story from Robinhood themselves. Once again, I don't use it, so I can't be 100% sure, and I want to highlight this as much as possible. That the data, that what I'm saying right now is just from a simple Google search, but for those of you who do use Robinhood and are able to contact the customer service, the customer support, you can feel free to ask this, but so far it looks like Robinhood does not support the GME warrant as well. And so we see how much problem this is causing for the brokers, for the short sellers, and is why we understand that AMC fair, or rather GME fair value at 120 is extremely likely, but not only that, it should be even higher. Now, as always, not to say financial advice, so do take our second of salt, make sure to do your own due diligence and research, and I'll catch you guys next time.